Hello traders out there in Traderland, welcome. My name is Des Woodruff. I'm a mentor and analyst here at Grok Trade, and this is the weekend edition. Good through Monday, January 17th, 2011, which we will be celebrating Reverend Dr. Martin Luther King Day. Markets will be closed, and we do celebrate his birthday on the third Monday of each January, and we thank him and we take time to remember those wonderful and great things that he did and what he stood for. Anyway, let's talk about what's happening here in the markets. On Friday, the markets ended the day with big gains, and we are up roughly, we're up several days in a row here. And we'll get into that when we talk about our technical analysis. But JP Morgan Chase did beat estimates, and we have a whole slew of banks coming out next week with earnings. So this could be setting the pace for some nice bullish activity going into the future here. We also had jobless claims come in, and but that rose by nearly 10%. Now we're at 445,000 mark. And that did not bode too well. However, we did have the PPI, or the Producer Price Index, did show a little bit of inflation levels, and those creeping up higher. Certainly higher than what was expected, but still fairly tame if you exclude food and energy. Retail sales rose to 0.6% in December, which is up 6 straight months. But we did miss estimates. We had estimates out there at 0.8%. Anyway, Consumer Price Index, or the CPI, also reported it did improve to 0.5% in December. However, if you do a little bit of math here, retail sales are gulp actually down if you were to figure all this in together. But anyway, let's get looking at technical analysis. We're going to be looking at the daily, weekly, and monthly, and we're going to be going fast here, so tighten up the belt and let's get going here. All right, what we have is the S&P daily. We continue in this monster uptrend, but check out how tiny this channel is going up. I don't like tiny channels. This is a good time to be buying and holding, long as we keep turning northbound. I do like that bearish divergence that we were staring at in the face is now starting to break up. We still need to get higher than this high, so we have a little bit of work ahead of us. But I see the next area of resistance. We need to first get through this trend line, or we'll probably more than likely stay chopping around inside this little mini-me channel. But I do see some significant resistance here at 1304. So do I see the S&P at 13? I certainly do. Let's bring in the weekly. Here is the weekly. Let's count some bars here. 1, 2, 3, 4, 5, 6, 7. 7 bars to the upside on the week. Gang, that's pretty extended. If you remember me doing this last time, 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. That's a huge amount of bars. We're knocking at that door there. Let's count this one. 1, 2. We can't count that one because it's sideways. Can't count this one because we got a lower high. So 1, 2, 3, 4, 5, 6, 7, 8. 9. So we did 9 there, 10 here. Go back in history and find how many other times you've seen that big of a run. So to say that we're overbought would be true. Most all oscillators out there have us in the overbought category. As long as the financials stay strong, this market can keep heading northbound. I see a resistance point popping up here next week at 13.15 to 13.18. 13.15, 13.18. I do see as being an area of resistance. And let's bring in the monthly. The monthly on the S&P shows us in a nice uptrend. We're busting through all sorts of resistance. So let's blow this up, really take a look at it. Busted through an area, this 1268, 1269, 1270 area. And the next areas of resistance on the monthly, which are really, you know, it's 1312, 1313. I think that we'll get there myself. 1325 is the next area, and then you have this trend line to deal with. So I do see on the S&P nothing really stopping it from going northbound. I don't see any trend reversals. I don't see any candlestick reversal patterns. I just see some nice upward momentum. All right, let's go here to the Dow. And here's the Dow pulling some data on the daily. And we have this big rising wedge, but we're continuing to head up. Now, if you'll see, we have a trend line that we're dealing with here. This trend line would put us, let's see, about, I could see us next week going up to 11, 836, 35, 36 area as being an area of resistance. And let's look at the weekly. The weekly is very strong, up 1, 2, 3, 4, 5, 6, and 7, just like the S&P. Closing near the high here, all looks well. You know, as far as the Dow's concerned and the weekly is concerned, we're knocking at the door about 12,000. I could see us getting to 12,000, gang, but look for a hang up around 11,915 to 20. That could be an area of a significant hang up, but I could see us getting up to 12,000. But after 12,000, I see us dropping. So I see us getting up there, and then the market's needing to relax. Here's the monthly that we're looking at. Got this big trend line coming across here. You can see the shadow back in 2002, 2003, coming up shadow here in 2009, and boom, we go crashing through that. So far this month, and we're already past the 11,744 area, so that bodes quite well. So 12,000, I don't think that that's going to be much of a problem for the markets to get up there. 12,233.5 will be next major resistance on the monthly. So let's take a look at Nasdaq. A lot of you are inside your technical stocks and making some money, I know. And we have resistance. We're knocking at the door resistance. We have this big nasty rising wedge, and we have this bearish divergence, but we're starting to break through a trend line on that. But we need to get higher than this level to heal itself. But with this resistance here, if we don't blast through that, I think it's going to be pretty tough to do. So if that is the case, Nasdaq can lead the charge to the downside. So we'll want to keep, you know, a close eye on that. Here is the weekly. The weekly, we go just screaming up, little pullback, screaming up again. 1, 2, 3, 4, 5, 6, definitely 6 heading up. We're almost at a resistance point. 2,800 will be a monster. I just don't know if it can make it up the 2,800. Let's see here, going up for the week. I mean, yeah, 2,800 would be it. I think it can. Now that I'm looking at it, can definitely make it up to 2,800. So be watching for that. Here's the monthly. The monthly is in a nice uptrend, beautiful channel, nice parallel lines. And this area, 2855, is a big time area of resistance. 2855 is something you do not want to ignore. Write that down. Watch this video again. Matter of fact, we're getting ready to look at the Russells, but make sure you watch this video again. Write down these numbers and let the numbers just prove to you how powerful technical analysis is. This is the daily on the Russells. Smaller cap funds, those stocks that do a lot of running. Something you want to watch for is this bearish divergence. We have a nice uptrend, but we need to tag this line up there. And if we're going to do that next week, I'm going to see resistance floating around 823, 820 to 825, 823, 820 area could definitely be of some decent concern. Here's the weekly. Weekly has just been on fire. Up, sideways, boom, up. We're just moving, busting through all sorts of resistance. I mean, on the weekly, we have just, I mean, blue skies above us. No problems at all right here. So that's good for the bulls. And if I were to bring in the monthly, let's take a look here at the monthly. In the monthly, we do have some resistance that we're going to be dealing with. That resistance is 825 to 880, but 827, 8 is the big number, and 848.5 after that. But the 850 mark, just keep your eye on that. It could be a significant area of resistance. I think next week will in fact be a bullish week. But I think that we could be setting up some bearish reversal patterns going into next week, which the following week could be bearish. Now, hey, I'm really going out even a day on speculation is tough. So these are opinions. Don't put your money on the opinions. Remember, we need to get rid of our bias and get rid of our opinions and trade what we see. A lot of you guys, especially in our chat room, are very bearish. You have to be careful being a bear in a bull market. If any of you were my students, I would just slap you on the hands and say, don't try to be smarter than the markets, because you're not going to, you will never be smarter than the markets. The markets are never wrong. You have to trade what you see. If the markets are going up, should you be a bull or a bear? Well, it seems very obvious until it's you in front of your computer by yourself. And that's where the idea of saying, well, maybe I'll be a bear in this market. So anyway, stay long until the markets show us something different. All right, so I want to show you something on FinViz. Cool little site on FinViz, and let me move this over so you all can see this. Really important to understand market rotation, and we do teach that on day number 1 of mentoring. But check this out. 1 week performance, financials up almost 4%, beating out everybody else. That is rock solid. The markets are only as strong as the financials or the banks, and we are showing some really strong movement. Look for the month. A 1 month performance, financials are up over 7%, beating out the others groups that are out there. And we're starting to see on the 3 month financials climb. So long as the financials stay strong, gang, the markets will stay strong. We need the banks giving us our support. We need the banks giving support to the markets to remain bullish. Quick note. This Tuesday night at 9 p.m., I'm going to be on a live webinar, doing a webinar on the importance of trading education and the path that we think is the best path to do. And we hope that you come and join us. The only way to join us is going to our website, and these are 201s, but if you go to the website, let me show this to you. What you want to do is come down, click on, I got to roll this up, the big red toolbox next to it, Meet the Mentor, and fill out the form. But if you want to do yourself a favor and get a jump start, go watch my video. It's not short and it's very informative. Watch my video at meetthementors.com. Meetthementors.com. The other thing I want you to do is do this. Make sure you click on the trading education. This is this link way up here at the top, right here. Click on this. Watch these videos. There are 5 courses: Trading Foundation, Trading Infrastructure, Technical Analysis, Charting 1 and 2. And this is 4.5 hours of free trading education. Do not pass this up. So that's what you want to do. I wish everyone the very best in your trading. Be safe out there in the markets. And thank you for being a part of Grok Trade.